Hey, what's up, my beautiful people? It's your boy Devo, so motivational, back with another day trade inspire recap. And real quick, as always, I want to say thank you all for the likes, the comments, the subscribes, and for everything you guys do for me. Right, everything y'all, every time y'all comment, it really means a lot. Every subscribe means a lot. Every like means a lot. And let's get straight into it, okay? So I didn't have this pulled up because, as we know, today we didn't have data. I know that looks very unprofessional, me pulling up like this. But as we know, we didn't have much data today, and I already knew that, as we see. So I didn't even have this pulled up. There was no real news coming out with Trump or anything to move the market. And tomorrow, as we can see, we don't have no news, any data coming out tomorrow. We have crude oil, stocks change, production. So this is a little bit of data. So we can see how that comes out, but I'm not sure if that will really move the market as much. And look right here, I'm gonna be a little mad if it breaks further, which it probably will do. And as we see, the market was real choppy today. So coming in the market, what was I? I was actually bearish coming into the market today. Why was I bearish? Because just as yesterday, how we started off, where are we? Yeah, yesterday how we, oh my goodness, I hate when I do that. Just like yesterday where we started off near area of support, as we see right here, we start off at support. Today we started off at resistance. Well, actually pre-markets they knocked us down, so we had a gap. So that's why this. We'll get into that. So we were at resistance to end the day. So that's why coming into the day from yesterday, I was like, okay, coming into the day tomorrow, I'm already bearish because we're already at resistance, right? And if we go to the daily, okay, coming into the day, and as we can see on the daily, we are at an area of heavy resistance at this 597 area is going to be like an ultimate resistance right here. If we break towards this after this 597, this 599, if we break that 599, we're itching up to 600. That is huge because if we break up to 600, that is just huge because we're getting close to all-time highs already. All-time highs at 613, and we break up to 600, we're getting real close, and we're already real close at it too. So we are waiting on this pullback, which we know we will get. We don't know when, but we know it will happen. But we are at a heavy area of resistance, and so coming in the day from yesterday, I was already bearish. Just like yesterday, I was bullish because we were at support. Today, I was bearish, okay? And so I was very patient today. Because we gapped down. So I was like, okay, this gap might get cleaned up. We're in the middle of an area of support and resistance because we got knocked down in pre-markets. I was like, okay. And so what did we do? We ranged, we dropped, and then I seen this right here, but I was like, no, I need an actual trend to form before I trust any gap getting filled. And just as I was thinking about it, look what happened. It got filled. This gap had got touched, but then it got ran back through and they just had a bunch of range, and I was like, okay, that's what I like. Why do I like the range? Because I know what comes after the range: a manipulation and a distribution. That always plays out. Some type of manipulation, then distribution whenever we have these ranges, right? And I was like, that's perfect. Why? Because we're in the middle of this support and this resistance. When we give this range, when we give this manipulation, it can manipulate up to this area of resistance, giving us a huge distribution, right? And so, look, because if we want to take out these lows and then we can get our stop loss up here, and if we could have had like some kind of entry up here, that would have been a big profit, RR, a big risk to reward. But it didn't give us necessarily a manipulation all the way up to that range. It kind of just filled this gap a little bit. As we see right here, it kind of just filled this gap a little bit. Can you guys see me? Real quick, let me make sure. Okay, you guys can see me. I'm not too dark. All right, so we just kind of filled this gap, and I was like, oh yeah. So what was I looking at whenever we had this manipulation to know for sure it was a manipulation? To know for sure, because previously I have got on here and I was like, I thought it was gonna be manipulation, so I hopped in. No, I came in with a better thinking process, and this is why whenever you lose a trade, you go over it and you learn from it, okay? Like, I'm not just gonna hop in just because, oh, I think it's manipulation, just hop in, because it could, just want to test the top of this range and then keep shooting up towards this resistance right here, right? But what did I wait for? I was like, okay, if we if this is a manipulation, or okay, if this is an actual trend up, we shouldn't come back into this range, number one, right? So that was my first confluence. We shouldn't come back into this range if this is going to be the actual trend, because remember, it takes a lot of power to break out of a range. So we break out of a range, it takes a lot of power to the upside or to the downside, right? So it took a lot of power to the upside to break out of this range. So for one, I was like, okay, it shouldn't come back into this range if it wants to trend up. So this candle right here, this 593 candle, it wicked the top of this range. So I was like, okay, I mean, if it wants to continue the trend, let's see. It didn't continue the trend. It rolled over, came back into the range. So that was my first, okay, my first confluence. Like, okay, it wants to be a manipulation. What was my second one? Well, we have these fair value gaps. So I was in my 5 minute. My 5 minute. As you can see, let me delete this because I can just mark that back out and show you guys. That's where I had my entry at. Okay, so I had this fair value gap right here, right? I was like, okay, first confluence, it shouldn't come back into that range, right? Second confluence, let me see the fair value gap get ran through, right? Because as we know, we should get a reaction off our fair value gap. What did it do? It came down. It ran through this fair value gap in our 1 minute time frame because we had our 5 minute fair value gap. In our 1 minute, we had two fair value gaps, right? So we ran through this first fair value gap. In our second fair value gap, we ran through it also. We got this strong wick right here, but it ran all the way through it. You see what I'm saying? It ran all the way through this fair value gap, and then it wicked at the bottom of this, basically kind of like an order block area. And yes, order blocks are important, but if this is an actual trend, it shouldn't come all the way back down here, right? It should give strong reaction off this fair value gap. So that was the second confluence. We ran through our fair value gap. Third one, look at this, another red candle. Boom, boom, boom. So so our first confluence was it shouldn't come back into the range. It came back into the range. Our second confluence, it shouldn't run through these fair value gaps. It ran through these fair value gaps. So, okay, confluence number two, short position that we want to take. Our third one, let's just see how price is reacting. Third one, boom, 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 boom. It ran through all of this. And we were like, okay, oh man, and price is breaking down. Oh man, I'm mad. Oh man, I'm mad. But okay, let me continue. Okay, so third one, we ran all the way through this stuff. And I was like, okay, now what am I waiting on? Well, since I know it's a manipulation, I'm waiting on my pullback to my sell side fair value gap. What did we do? We came up, we struggled up, boom, broke up, and this is where my first entry was at for one contract at 593 strike price. 593 strike price, I only bought one contract, right? We started breaking up, and then we had this other fair value gap up here. So I'm like, okay, we do have a second fair value gap right here. This is where our second fair value gap is. So we have one fair value gap, two fair value gaps. So, okay, I got in at this first one just to be safe. Because as we know, price can touch that fair value gap and drop, whenever it wants. So I got in at this first value gap only for one contract just to be safe, you know what I'm saying? Because, I wasn't risking too much today, you know what I'm saying? Because I don't want to lose too much. I mean, it's a Tuesday. I want to just build my wins, you know what I'm saying? I'm not trying to take a big loss in the beginning of the week and set myself back. I want to just... If I take a small loss, okay, I'm cool with that. But if I get a small win, I'm cool with that too. Just building the account, right? Building the confidence, building the week up, okay? And so this fair value gap, one contract. We broke up, and then as we see, we reacted off the second fair value gap. Strong. Boom, boom, boom. This is where I had bought two contracts. And that was honestly, I shouldn't have done that. I bought two contracts right here of 592 and ended up paying off because I was on the right side. But I felt like I should have kind of just, did my one contract. Because right here, then I started risking more. Because now I have two positions in. I have a 593 strike price. And down here, I had two contracts for a 592 strike price. And, it worked out. But, like I said, I was trying to keep my position size small. But my feelings got the best of me. And as I pulled the trigger, I knew my feelings got the best of me. But I rode with it, right? I stuck with it because I was confident in the strategy. And I rode with it. What did we do? We broke up and we struggled. So look, our first entry price was at 10.12. Our second entry price was at 10.25. Okay, so keep that in mind. 10.11 and 10.25. We struggled. We broke down, and right here we were getting excited. Boom! What did it do? It wicked my take profit. And I was mad. Why? Because I don't want it to wick my take profit. Because once it breaks that wick, it should fall through. You know what I'm saying? It should fall through once it breaks that wick. Why? Because these are a bunch of buyers right here. When it breaks the buyers down and stops the buyers out, what do the buyers do? They turn into sellers. So that's why whenever you break an area of stop losses, that's why it ends up tanking a little bit extra, right? So, but what did they do? Buyers defended this area, bought it back up, and I was like, oh my God. I was like, it better not come all the way up and stop me out. I'm going to be real mad, you know what I'm saying? If it does that. So let me delete these just so I can show you my entry areas. So my stop loss is on the top of here, right? It has to be because it's the top of my manipulation move. And then my entries were right around here. If I want to do the average, I'll put it like right under here. So it was only a 101, right? This was a 101. We always want 2 to 1s and up, but today it was a 101, okay? Excuse my good people. What did we have? So it broke down, it wicked my stop loss, and I was like, oh my God. And when it came all the way up, I was like, wow. And what did it do? Fell back through. And right here, we start getting excited. It came up. I was like, okay, feel that area of liquidity right here. Wicked it. Boom, boom, boom. And then it wicked my stop, wicked them that same area again, and then broke through. Bam. And this is where I wanted to keep breaking. Why did I want it to keep breaking? Because my first take profit was right here. But I wanted it to clear this whole area and give me a 1.5 to 1. I wanted to clear all of these lows. But as much as I could get with all this choppy price action, and keep in mind, I was in the trade at 10.11 and 10.25, and we finally broke at 11.11. Hey, that's a good number. That's a good number for my take profit. 11.11. So I guess 11.11 is a special number, right? So it took me it took me a whole hour for my first entry. My second entry, it took me about 40 minutes, 45 minutes just to get this trade off. And that is why I didn't get as much profits as I really would, because as we know, over time, the option kind of decreases in value. So if I would have got in like right here and wrote it down and like for like 5-minute gain, it would have been more of a profit than you would if you're holding it for a whole hour. You see what I'm saying? But you know what I'm saying, you still take your profits. So I wanted it to keep breaking, but it ended up wicking up, and this was a strong wick, because if it broke through, it should break through. But no, these buyers started buying it up, and that's when I called my 2-trade one. That's when I closed my 2-trade 592 strike price out, and I closed my 1-trade 593 strike price out. So that was a good day today. We basically had 2 winners on the day for the same 2 winners on the day for the same entry. Basically the same entry, the same position. So that was a good one today. And what is frustrating about today? So I'm looking good on navigating these choppy, because look, this is nothing but range. Right? But we are so good at navigating this choppy market and seeing what is going on through all this mess, seeing this little manipulation, seeing this breakdown, waiting for this little touch in this fair value gap. We seen this other fair value gap, you know what I'm saying, waiting for this break of these lows right here. We wanted this low, this ultimate low, but it didn't break that one, right? And so we're so good at navigating these choppy markets. But whenever we get these run-ups, we don't get them, and we're not as confident on getting them. Why? Only God knows, right? I mean, one reason I feel I'm not as confident breaking up is because price is usually not this easy. You know what I'm saying? As I knew yesterday, as I was telling you guys, I knew it was going to go up. But I wanted some little play around and manipulation or somewhere, right? I didn't want it to just pump, because usually price doesn't do it that easy, right? And so that's where I got to capitalize on these easy home run days, because this is a home run. 588 to 593, that is a home run day. Instead of always capitalize on these choppy ones, these choppy markets, that's good that I can capitalize off those, but I have to capitalize on these big run-up days so I can actually be making bigger money. You see what I'm saying? Because on the choppy days, you kind of got to take what you can get. But on these run-up days, you're hitting the bank on those. And that's where I need to get better at, because as you can see, I mean, these past couple weeks, I've been breaking these choppy markets down, but on these run-up days, I'll be like, I didn't trade, or I had to trade the pullback because I didn't get in on the actual move. And so that's where we know we got to get better at, and that's where we'll get better at. Okay. So, but overall, today was a W. We had a 101. We wanted a little bigger, but we didn't get bigger. We're up $68 on the day. Let me see. Let me see real quick for you boys and girls. We're up $66 on the day. Okay, so not much, but our it was 33% on one contract and then 22% on the other. We were up a little bit more, but as we know, we got this heavy wick, so it cut about $20 of both of the options. But that is still pretty good because that is about 30. If you can get 33% of your contracts on every trade, that is a home run, right? That is really good. If you get 33% on your contracts every trade, that is really good. You know what I'm saying? And so we're happy about the day. Good good entries, good capitalization, good patience, right? We waited all the way to 10 o'clock to get this trade, 10:30 basically to get this trade, and then we waited a whole hour of, it going up, down, and emotions like, man, and that's why I'm getting better with my emotions during the trading, because I know my emotions fuel everything. You know what I'm saying? Just like how I got emotional when I seen that drop and I added 2 more contracts, I'm getting better at that, right? I'm getting better with the emotions to just be patient. You know what I'm saying? And that's where my biggest mess ups happen with me being impatient. Okay, so today's not gonna be too long of a trade recap. I don't want to make it too long because I just really want to give it to you straight, give you guys good value, keep you guys entertained, not keep you guys here for 40 minutes. Sometimes I have to keep you guys here for 40 minutes to give you all the info, but today we don't have much info. Let's look at the data for tomorrow real quick. The crude oil imports change, stocks change, mortgage application, mortgage market index, finance index. So some of that can probably move the market a bit. And then tomorrow, as we know, if we have news coming out, I'll go over it all with you guys. All right. So that's pretty much it. Remember, guys, study so you guys know what you're looking at in the markets. Remember to go over you guys' trades, because as you can see, it makes me better every day when I go over these trades. And it will with you as well. You just have to go over your trades, see the ones you lose, see the ones you win, see why you won, see why you lost, and just go over it, because ultimately it's always you versus you. So whenever you study and you learn, you're going to end up being on the right side of it. You know what I'm saying? It's a journey. Remember, this trading and getting money from basically the government, the markets, they're not just handing you money. You know what I'm saying? You have to put in some work for this. You know what I'm saying? And so that's why it's a journey. It's a marathon, not a sprint. All right. Remember to study so you guys know what y'all looking at. Remember to have risk management. Remember to follow your strategy. And risk management, remember, that is the most important thing. Risk management is one of the most important thing you need in this game, right? Because every trade is not going to be a winner. And so even though no matter how good your strategy looks, you don't just throw your whole bank account into it, because it's a probabilities game. You know what I'm saying? Your strategy is going to win more than you lose, but you will lose with your strategy. You know what I'm saying? Just like my strategy this time won, tomorrow it might lose. You know what I'm saying? And the next day it might win, the next day it might win, and then it might be a loss. You know what I'm saying? It's a probabilities game. That's why we have a strategy, so our strategy can give more wins than losses, but we know the losses will come. That's why you got to have that risk management. And it's a marathon, not a sprint. You want to build your account over time. You're not looking for the jackpot in one trade, okay? And I fell victim to that, and I know new traders are going to fall victim to that. It's just the nature of us, okay? All right, so I love every single one of y'all with me on the journey. Every one of y'all mean a lot to me. And remember, guys, stay persistent, passionate. Make sure you get paid, all right? Peace.